In the pristine world of traditional finance, lending money without collateral to businesses in emerging markets sounds like financial seppuku, yet here we are in 2025 with an entire ecosystem built around this seemingly contradictory concept, and the yields are mouth-wateringly high. In conventional DeFi lending, overcollateralization is king. Want to borrow $5,000? Simply deposit $10,000 as collateral. It's a bit like a bank asking you to prove you don't need a loan before giving you one, a paradox that would make even Kafka raise an eyebrow. But what about the vast majority of the world's population who don't have more capital than they want to borrow? Enter Goldfinch, a protocol venturing where few DeFi projects dare, providing uncollateralized loans to businesses in emerging markets like Nigeria, Mexico, and Southeast Asia. Their innovation isn't just technological, it's philosophical. Rather than demanding on-chain collateral, they've built what they call a trust-through-consensus mechanism. Think of it as replacing the cold, algorithmic heart of traditional DeFi with something more human. Though as someone who's watched humans make financial decisions, I'm not entirely convinced that's always an upgrade. The system works through a carefully orchestrated dance of borrowers, backers providing first loss capital, liquidity providers supplying capital to the senior pool, and auditors verifying borrowers. With target yields of 10 to 12%, this sits in a compelling middle ground, higher returns than many traditional fixed income products, but with a risk profile that's partially mitigated by legal recourse, insurance partnerships, and diversification. However, let's be honest. The protocol has faced defaults, most recently with Lend East joining the default club in early 2024. Your fear, and the fear of others, is what's keeping these yields high. It's a bit like finding an empty beach during tourist season. There's probably a reason it's empty, but sometimes that reason is just that it's harder to get to. If you found this breakdown valuable, please like and share this video. And make sure you follow me, otherwise you may never see my content again. The algorithm is about as merciful as those default rates I mentioned earlier.